Adrian Mowat, emerging market equity strategist, joins us all the way from Hong Kong. Adrian, thanks so much for joining in. Indian markets out of rough weather, would you say, or do you believe there's more pain ahead, given that we're already close to the all-time high on the index? But yes, broader market underperformance still stays.
Yeah, I think it's important to look at India within this global context. So it's a tough environment in emerging markets. Year to date, emerging markets down, nearly double digits. Many of the, more sensitive to interest rate markets like the Brazils, Turkeys, Indonesia's down in sort of the mid-teens. So India's decline year to date is an outperformance of emerging markets. So I think the performance of the Indian market is commendable against a difficult backdrop. Now, as we look forward through the summer season, I think global capital markets are still going to be very volatile because of the trade dispute that's going on between the United States and the rest of the world. And the issue with that trade dispute is if it continues, then it does have an impact on corporate earnings. And that impact on corporate earnings could be quite broad. So it does seem reasonable that global equity markets are nervous about this. Now, going back to this emerging market story, if you go back to January when there was a lot of optimism, very large inflows into EM, record highs towards the end of January, we're really seeing the opposite of that now with large outflows from EM equities. And so I think from the perspective of the FIIs flow, you're probably still going to see some weight on the Indian market. So India doing better than the rest of EM, but still quite a tough environment for making money, particularly if you're a dollar-based investor investing in India, where you've got to be concerned about sort of broader EM currency weakness, which you're also been seeing in the Indian rupee year to date.
Right. Adrian, select large caps are witnessing big buying while the rest of the market has been quiet. Do you think there is a case for a narrow rally for the broader markets too, or is this divergence going to remain?
So I think there's two style factors at work here. One is a defensive bias. The second is a desire to have offshore earnings or dollar-denominated earnings rather than local currency earnings. So the defensive bias works in favor of the FMCGs, and then the outperformance of things like Reliance, some of the key IT names, reflects the fact that they're dollar earners and are beneficiaries of the weak rupee. So it does seem to be a rational market, with then the underperformance of domestic cyclicals and also perhaps some underperformance coming in around domestic policy as we move towards the next general election in India.
Now, earnings momentum in Q1, will that move the market higher?
Well, I'm afraid it sort of feels a bit like a Groundhog Day, where a lot of optimism about the level of earnings growth in India, and then that level of earnings growth having to be pared back as the results come through. So I think if there are upside surprises, it will be related to currency translation, and I suspect that we'll continue to see some revisions down in domestic cyclicals. So, India has that ongoing stress that expectations are high, P multiples are high, and the earnings delivery is lower than what the consensus expectation is.
Now, emerging market flows continue. How long do you think they're going to last?
Yeah, I totally agree. I mean, you're trying to swim upstream here with these outflows from EM, and India's a big emerging market, and with a lot of passive index-related money, India will see selling when you see broad redemptions in emerging markets. I think for now they continue. The factors at work that have been putting pressure on Turkey, on Indonesia, on Brazil, continue to be in play. You add to that the pressure that's in place against the Chinese equities, where the sentiment is being hit because of this trade row between the United States and the rest of the world, but particular focus around China and China's big trade surplus with the US. And I would imagine that you would need to get some stability in the Chinese equity markets before you're going to see a broader comfort in emerging markets, and then begin to see a stem of the outflows that we've been experiencing to a very high level in the last month or so.
Okay, so how would you say emerging markets are set up as against, the developed markets as per the large asset allocators?
It sort of feels like it's the US against the rest. So year to date, MSCI US is up 5%. Most of the developed markets are down year to date. And then if you look at the emerging world, there's some more extreme examples, which I've mentioned already, of these outliers that are more interest rate sensitive, being down mid to high teens. Then the fundamentally stronger EMs like India is down just 5% for a dollar-based investor. So in local currency, not significant. And then China is modestly up year to date. Within Taiwan and Korea, as you've seen in the United States, tech hardware and tech software continue to do very well. And so those markets are benefiting from that. And I really feel that this sort of trend that we've seen into passive products in emerging markets is a mistake, because the diversity of fundamentals is so broad in the emerging world that you're better off to be selecting a few key countries for outperformance. And the ones that I would focus on at the moment for outperformance would be China, Taiwan, Korea, on the back of earnings growth in China, Taiwan, and Korea because of the tech sector. And I also think, selectively, India does well at an index level as these large caps do well. Beyond that, I'm really struggling to find countries that I'm interested in risking capital in EM this year.
2019 in elections, so how do you think the market sentiment would be before that?
Yes, so I think one has to acknowledge in all sort of democracies that as you move closer to the election, politicians will address issues that matter to people individually. Collectively, we will call those populist measures. And those measures tend to be things that capital markets are less comfortable with. So rather than saying it's a particular party's view that will cause the market some discomfort, I think it's just a general fact as you run into elections that you will get a bit more populist rhetoric, and that policy backdrop will be less comfortable than if we weren't focused on politics. So I would imagine that the election cycle will be a reason for investors to hold off committing capital rather than necessarily a sort of a fundamental negative that they're selling. It's just maybe makes them more cautious, procrastinate a little bit on making investment decisions.
Okay. What, according to you, could be this, heightened fear of a trade war impact on emerging markets, especially for domestic emerging markets like India?
That's an interesting word, logically. I think if we started with logic, we wouldn't be in a trade war. And that's why it's very difficult to determine what the strategy of the United States is. What is lighthouse planning? What are we going to see from the likes of Larry Kudlow? I think the President of the United States probably views what's going on as favorable towards himself, keeps him in the headlines, apparently addresses the concerns of some of his voters, in theory trying to protect US jobs, although the irony of it is it's actually hurting US jobs already. I at the moment don't see a near-term exit from this, a sort of an ability to de-escalate. And the behavior of the President of the United States around the NATO summit, very erratic statements about what was going on in the United Kingdom. And now he's in Helsinki meeting the Russian president. It just sort of feels that this trade war continues through the summer. I think the only, maybe modest silver lining, bit of hope that there is some talk that China might roll back its, China 2020 plan, the sort of future industries that it's been focusing on. So perhaps there's some concessions there that will allow Trump to declare a victory. But I go back to, you use this word, logically, and I just don't feel that we can address this logically. And we're just going to have to deal with the tweets and the, policy changes that really don't make a lot of economic sense, but perhaps make some political sense as you move into the midterm elections in the United States.
Adrian Mowat, always great speaking with you, and you're sounding a little more positive than the last time when we chatted, where you said that don't be in a rush to buy stocks. You'll get many opportunities. It's going to be a long, dry summer patch. But yeah, we've actually worked out better than the rest of the emerging markets. A good outperformance, 7.5% coming in on India itself in a tough and difficult backdrop like Adrian Mowat just highlighted.